than discuss Superfly, but that's all right. Welcome everybody. Feel free to chat in where you guys are joining us from today. I do appreciate. We're broadcasting in a multitude of different rooms right now, and when we do so, reading both rooms. By the way, people always ask if this is live. Oh, it's live. Okay, it is live, and it is real, and it is spectacular. The S&Ps are all over the place this morning, and well, we're going to take a look at that a lot today. So, a couple of things I like to cover before we get officially started. I agree. I'm going to have to finish, by the way, the Zeppelin song. The second this is done, I'm turning it back on. I'm just letting you guys know. So Costa Rica for a couple more days. That does not suck. Yeah, I'm in Paradise Valley. I'm in Arizona. Paradise Valley is a town in Scottsdale, Arizona. It has been absolutely ridiculously hot here the last couple of days. We literally hit, I think, 104, 105 the other day. It's freaking March. March. Okay. There's two seasons here. Okay, cooler and really freaking hot, and now we're in really freaking hot. We lost cooler, so I got to get out of here as soon as I can. I'm heading to the mountains. I'm just gonna flee to the mountains. That's it. It's what I do. So cool. A couple people here from. I was just down in Ahwatukee this past weekend. Um, anyway, it was hot. It was really hot. So I go back and forth between here and the U.S. Virgin Islands, specifically St. Croix, but I don't want to go to the island until the whole TSA thing is like worked out. Because if you go to the island, TSA is already slow on that island. Can you imagine, like right now? I saw lines in Puerto Rico that were 6 hours long, and I was texting a buddy of mine that's on the island now in St. Croix. He was telling me, he's like, just forget it. He's like, don't go. He dropped a friend off the other day. They got to the airport. His friend wouldn't get out of the car, and he just kept right on going. He's like, I'm not leaving. So I got that going for me. All right, let's get down to it here. You can ask questions throughout the course of the presentation. If I do not get to your question during the course of the presentation, I'm going to try to get it to it later. So hit all the questions I possibly can. As I said, it's live. The S&Ps are down some 30 points. I want to bring something up that I found interesting, and I've been looking at it all morning long. We're going to discuss exactly this today, but this one's going to be in a different context. Okay, what's today's date? Today's date is March 24th. I'm not showing you that to show you that it's live. Today's date is March 24th. Did you know that there's still $30 of expected move in today's trading session? Now, if you have no idea what expected move is, that is how the option market depicts the rest of the risk for the day. And that's a really big number at this time of the day. You're already halfway through a trading session, and the marketplace right now is like, you can feel it. It's like fever pitch. Even though moments ago, the S&Ps, when I started this, the S&Ps were massively unchanged. Just the last couple of moments, the one thing that I urge people to understand: do not watch PR wires. Do not watch news. Do not read the news. It does not matter. By the time you can read anything, that marketplace has already moved. Nothing matters but what's going on in the tape. This is volatility, people. And today, we're going to talk expressly how you can actually navigate it more effectively. But I wanted to start with something, a little bit off the cuff, and that's it right now. There's what I would term, big boy volatility still lurking in this marketplace. The other thing, I would drop all news feeds whatsoever. Okay, that's number one. The second thing I would do here, and I really mean this: stop with bullish or bearish. Okay, we're no longer like the market's still bullish, the market's still bearish. Okay, it's not even an argument. You are in volatility now, and that's all that matters. Okay, and whether that volatility, subsides in a more bullish nature or more bearish nature, nobody cares right now. On the professional trading world, there is no bullish or bearish. There's only volatility. And I stress this to you so much because when I was really young, like 22, 23 years old, my my very first summer of trading, everybody was talking about how bullish the markets were. And they grabbed me aside, the firm I worked with, and they grabbed me aside. They said, kid, in this, there's no bullish and bearish. there's volatility, okay, and we don't know how that is going to play out. And there's no assumptions. And once you have assumptions, you're already dead. Nobody told you so, but you're already dead. And it's one of the most important things you can remember about volatility. Okay, and you're in it right now. And how do you define volatility? You can look at VIX, which is 27. Okay, you can look at what we term volatility futures. For those of you that have never seen this product before, a lot of people have never seen volatility futures. They're inverted. Okay, that is, if you will, if there was a sign, like a marquee sign of like volatility futures have actually inverted now. So you're in it, people, and it's getting real out there. Net though, okay, I want you to understand your exposure. You're only down 6%. Okay, so last thing I'm going to mention, then we're going to get deep into this presentation. Okay, this isn't meant to scare anybody. Okay, these are just facts, people. This marketplace right now, here you go, okay, to where we're presently trading. It's off 6.5%. 6.5%. Now, if you listen to anybody, okay, including people in these chat rooms, you would think, okay, it's like Chicken Little, the world is coming to an end. The sky is falling, man. You're off 6.5%. How we're not even in corrective territory yet. How is that even sell side activity? Because there's been a couple of bad trading sessions. That's what it just blows my mind when people are talking about markets, and it makes it literally sound like it's the end of the world. We're off 6.5%. Everything needs to have some perspective. I mean, today the S&Ps might be down 30. You realize the financials are even up today. So I'm not saying this to be bearish, not at all. Just to wake people up and to understanding. Okay, stop thinking. Okay, and I'm dead serious. Stop thinking about a week from now. What we're going to talk about, what we're going to get into right here, right now, okay? Superfly, okay? This is DTE. So I'm going to explain that. Again, my name is Don Kaufman. Welcome everybody today. Yeah, let's get into it. By the way, this is one, talk about like favorite topics to talk about. I'll come in here and I'll talk different strategies from time to time. People, I am into this. I love zero DTE. I call it Don DTE, but Superfly is the strategy that we're going to be discussing today. So strap in. We are going to do some live trading. As I trade live, I will talk a little bit about allocation, but allocation is, in the end, is up to you. You're the one who's got to pull the trigger in here, right? So as I kind of forge forward here a bit, let's get right down to it. Okay, what does this mean? It means yada, yada, yada. Okay, do what you're going to do. I was in the brokerage business. I'm not in the brokerage business anymore, yada, yada. Copyright disclaimer, it's mine. It's all mine. Look, if you ever need to get a hold of us after today, easiest way to get a hold of us is right here. I always like to make this, okay, a critical point. Support@theotrade.com. We answer emails. Okay, most of the emails, if it's just a general question, 30 minutes is usually like the max wait time for us to answer an email. Okay, if it's like an email to me, I'll be back to you within less than 24 hours. Okay, so let's move on. Okay, so welcome everybody. So we're going to change the way you guys think about zero DTE. For my own curiosity, let's make this an interactive session. Okay, my own curiosity, my curiosity, it burns. Okay, I got curiosity and it burns. How many people here have, okay, or are presently trading, okay, with some zero DTE? Like how many people here have experimented with zero DTE? Okay, you just say me, okay, a yes or a no, a Y for yes, an N for a no, right? Let's get crazy. Holy crap, it's a lot. Cool. All right, you don't have to tell me if you're profitable. So zero DTE, I'm going to tell you a quick story. Zero DTE was working for everybody until about like 3-4 weeks ago. Once that we got into the quote unquote volatility, people started freaking out because, we're up, we're down, we're so up that we're down. Sometimes we're down so far, okay, that we actually get tweeted upon. By the way, tweeting, okay, it's tweeted upon and you explode, 200 handles higher. I mean, it got wild yesterday, no doubt about it. But I'm going to give you a different way to look at zero DTE today, okay, and why some of the biggest triple-digit option winners are going to be forming, okay, before the next trading day even starts. And I'm actually going to show you those trades. So first of all, market now, it expires every single day, okay, and it's really reshaped. And I can't stress this enough. Zero DTE is totally reshaped, okay, the landscape out there. And I don't mean because, well, I can trade every single day. It's not about that. When you have expirations listed every single day, and one of the things I'm going to stress to you guys today, and by the way, I'm slated for like, an hour, 90 minutes today. I hope you guys are okay. If I go over, I go over. You guys okay with that? Because I'm getting into it today. I'm all wound up. I'm drinking more caffeine. This is like second dose of the day, and it's only 10 o'clock. You're all in big, big trouble. I'm heavily caffeinated, enough to probably kill a large animal. I am a large animal. It's good. The market now expires every day. What people miss about this very concept is once you list options expirations every day, okay, the nuances get pulled out of the market. What I mean by that, and I'm going to go live. Let's do it. Okay, we're going to go live. When you start listing expirations every day, like here in the spiders, close up this left side bar. There's not much, like, it's not too ambiguous anymore. When I say like all the little nuances and all the little, like, what the marketplace is expecting tomorrow. It's 25th, 26th, 27th. You go, what do you mean you know it's expecting tomorrow? Like, how do you know that, Don? Okay, look over here, okay, to the right-hand side of the screen. What these numbers are, that's the option market and implied volatility. What the implied volatility is, it's like taking a temperature of the marketplace. There's buyers and there's sellers. And those buyers and sellers, like just for tomorrow, we're expecting, okay, in spiders, just about an $8 move. Now, people always say, excuse me, should I trust that number? Yeah, absolutely. Unequivocally, you should trust that number. Because that $8 move, and again, sometimes a little hamster gets stuck in the wheel. Some people have never seen expected move. I got people probably in here that have no idea what an expected move is. It's how the option marketplace depicts risk. Once you start adding multiple expirations, okay, the market is less ambiguous. You know it's coming tomorrow. You know it's coming the next day. Is it always right? Absolutely not. It's the statistics, okay? But I'm going to tell you right now, there are hundreds of billions of dollars being traded for the options for tomorrow, okay? So it reshaped the way that we look at markets, okay? And I'm going to tell you right now, this is an article that actually came out at the end of the year, okay? And everyday traders go from fringe players to dominant market force. This was just a couple of weeks ago. It's so interesting how quickly things have changed. It was just a couple of weeks ago. This one came out December 31st. And I wanted to put this, it's just a headline, okay? By the way, I absolutely, as they say, I hate news. I hate news in the market. This came out from the Wall Street Urinal. Yes, I said that correctly, right? I really just despise, okay? It's not about like anti-media. The financial news, by the time they can get an article out, whatever it is, it's so passé. It's like everybody, but this one I thought was interesting because it's not talking about like something that's going on. It's talking about there's been a retail movement. You're retail, I'm retail. There is a retail movement underway, okay? Like that has never happened before. And I stress this to each and every one of you. All right. When we start talking about, like retail and so forth, okay, this stuff is critical. It's just absolutely critical. Now, I'll continue onward and upward. This retail investors close out, okay, one of their best years ever, okay, how they beat Wall Street at its own game. This is also an article that was taken literally December 31st. And a huge amount of this has to do with zero DTE. So with that, okay, we're going to kind of hop in here. I hid one of the slides that I want to show. Okay, I'm breaking things again. I'm breaking things and I like it. Okay, so as I was saying, okay, here's that a brief introduction on myself. So once again, welcome everybody. Again, my name is Don Kaufman. Look, how did I get involved in this business? Everybody has a story how they got involved in the business. So I grew up around it. Okay, I literally grew up in and around trading in the trading floor. So I had family that traded on the floor of Chicago Board Options Exchange back in the 1970s. I was around it a lot as a kid. I had no intention of ever going into this business. I did not do a degree in finance. I studied molecular genetics. You want fries with that? Um, but 3 weeks out of college, okay, just on a whim, I was literally out of college, like 3 weeks out of college in 1998. On a whim, I got a call and ended up in Chicago. I was going to go clerk in Chicago. If you guys know what a clerk is, you clerk on the SIBO floor, Chicago Board Options Exchange. So I go down there to clerk in 1998. 1998 was happening too because it was like the internet boom, and I'm clerking down there, and somebody on our crew showed up. I mean, like I was getting people coffee. I was bringing them their trade sheets. I was getting yelled at, whatever. It's a crappy job, but it's a crappy job. You want to learn the floor. It's how you got to do it. A few weeks after I was in Chicago, okay, somebody showed up late to work and they were still, half in the bag from the night before. They got fired immediately. They yanked a trading jacket off of him. Here you go, Don. Okay, I had no freaking idea what I was doing. There I was at 22 years old. I had been in Chicago for 6 weeks and was full seat trader. So it's a pretty wild ride. Only days after I was actually trading, we hit the long-term capital management, okay, which a lot of people may or may not remember that. So long-term capital management actually happened in August, of course, of 1998. That was my first kind of dose of heavy volatility and never stopped then. I mean, it was just on after that. I traded right into the internet bubble. I was there in 2001 when the entire Nasdaq collapsed, and in 2001, I was coming out of the SIBO, and a guy actually on the escalator, a long hair hippie guy, came up to me. That long hair hippie guy happened to be Tom Sosnoff. Tom comes up to me and says, "Hey, we're starting a brokerage firm. We know who you are. We know each other. Okay, come. You're young. Come with us." And I'm like, "Oh, okay." I had no idea what the hell I was doing, by the way. Like 24 years old. So I was with Thinkorswim from 2001 to literally 2015. At my time at Thinkorswim and TD Ameritrade, I was on the executive team when we took the company public in '07, which was an interesting time. Did really, really well, obviously, in that. I was there during the financial crisis, which was also quite exciting. I was there when TD Ameritrade bought us in 2009, integral inside of a lot of the deals. I had a 5-year lockup clause, which from 2010 to 2015, I stayed at TD Ameritrade as worked in the trader group, and at that time, okay, I ran education for all of TD Ameritrade, and what at the time was 7 million clients. And the bottom line is, why do I explain this to you? Because I got to see everything that you ever did. We had the largest retail options order flow in the entire industry, and for 15 years, I got to study it. Basically means I could see everything every retail trader ever did. I know where your stops are. I know where the people triggered into trades, trigger out of trades. It's incredible though, okay, of how much depth you get from watching order flow. But that's why I wanted to actually kind of back up and cover that a little bit. All right, now question is, okay, let's get right into DTE. All right, what if the best zero DTE trades of the week, okay, the ones for potential triple digit returns, start forming while you're asleep? One of the things that people are kind of missing about zero DTE, and I apologize, my slides again are having issues in here, so I'm going to fix slides as I'm going. Okay, he's going live. Okay, so interesting that all of my slides are broken. Okay, we're going to fix that in no time at all. But one of the things that's very often missed, okay, is and I'm going to scroll back over here. We'll get it just right. Okay, one of the things that people miss specifically, okay, about zero DTE is the trade might not necessarily be open it today, close it today. There's a lot of little nuances that we're going to go through, okay? So when you're in zero DTE, all your decisions compress till right now. Feedback accelerates, okay? Waiting, you can't wait for anything. You got to be on it, okay? Zero DTE is daily expiration, same day resolution, okay? And this didn't just join the marketplace, okay? Zero DTE is completely, okay, it is the marketplace. One of the things I stress to you people so much that they don't get, okay, is that like almost 60% of all volume, okay, on a day-to-day basis is zero DTE. It does change from day to day. During a Friday, during a Friday because everything technically has expiration on Friday. The volume is upwards of 80% of options, okay, are basically expiring that day, all right? It completely took it over. So there's a reason traders are drawn to zero DTE. There's a clear opportunity, okay? It's same day outcomes, no overnight risk. Now, we, okay, are going to look at this very, very different today, the overnight risk in this, okay? So zero DTE gives you a clean shot. Your capital is not trapped. Okay, and that's exactly what we're going to do today is we're going to take some shots with it. It's incredibly, incredibly appealing if approached right. The decisions that resolve the same day, it's immediate feedback and the relevance is today. Okay, but what traders love about zero DTE is also what makes it incredibly dangerous. Okay, there is no tomorrow. And mistakes can show up really, really fast. This is exactly what I wanted to cover today because if you looked back, all right, 3-4 months ago, okay, it didn't matter what you did. You were making money probably with zero DTE. Seriously, for those of you that traded zero DTE, it felt like a couple of months ago you could do no wrong. All of a sudden now, okay, it's a fish out of water. People are completely destabilized. We're higher, we're lower, we're getting tweeted on. None of that crap matters. In fact, what you're going to learn over here is not only aren't the mistakes going to show up, you're not going to care, okay? Look, whether you're trading zero DTE or not, okay, if you're in this marketplace right now, you're being affected by zero DTE. It affects everything, timing. Okay, so the real question here: are you prepared? Okay, for the market? Okay, that you're already trading, and it's a great question. Even if you guys are not trading zero DTE, you're prepared for it. Okay. I mean, not the marketplace that people necessarily learn, but the one you're in now. So one of the things that again a lot of people miss is we just added more expirations with zero DTE. What did they do? Okay, the markets, okay, specifically the options exchanges, just added, okay, zero DTE basically 3 times a week for the biggest and baddest of the tech stocks. You know, your Microsoft, your Amazon, your Nvidia, okay, your Apple. You'll look at them in just a moment with me, and Broadcom, okay, and Amazon. Oh my, and Meta, okay, so exciting, okay. And I'll tell you what, the market, it's not going to wait for you. Just not going to wait for you. Daily expiration is now going to separate the traders every single day. There's no middle anymore. You either understand this marketplace or you don't. Okay, and this is why zero DTE, okay, hurts a lot of people. Zero DTE is very, very fast. It's very compressed. As I said, mistakes are going to show up. And those mistakes, especially in this marketplace, you're in a higher volatility marketplace. So the higher the volatility, the more the option premiums are going to cost. And it gets wild, and that fear is earned, okay? I'm not pretending it doesn't exist. So everything you've heard is reasonable. It's gambling. It's too fast. You're going to blow up, okay? You got to have structure. Bottom line, you got to have structure. So speed doesn't hurt traders. Guessing does. And daily expiration, okay, punishes guessing faster than anything else. So the question is, what if the best zero DTE trades of the week, okay, the ones for potential triple digit returns, start forming while you're asleep? We're going to look at this in a very, very different light. Right here, right now, we're going to go live. Okay, we're going to go live. I am going to come back to a couple of slides in here. Okay, but when I say we're going to go live, let's do it live. And the reason we're going to do that, okay, we're going to give you a pretty good dose of education with this. As I was saying a moment ago, zero DTE, okay, originally started back here in like SPX. Okay, in the SPX, back in 2017, they started listing Monday and Wednesday expirations. Okay, they already had weekly expirations, but they started listing Monday and Wednesday. The moment that they did that, you knew eventually you're going to have daily expirations, but they didn't call them daily expirations. Okay, they literally, okay, everybody has named it zero DTE, okay, which is far more intimidating, and I like it. Okay, but they're daily expirations in here. So after the SPX came the spiders, and the spiders had daily expirations, and then the QQQ had daily expirations, and the IWM had daily expirations, and then, okay, just recently, people, this just happened on February 2nd. Where are we right now? Okay, you're less than 2 months into it. We started listing Monday, Wednesday, and Friday for Apple, Google, Microsoft, Amazon, okay, Tesla, Meta, Nvidia, Broadcom, silver, gold, okay? They started listing Monday, Wednesday, Friday. And all of a sudden, the door cracks open. Now it is game on. So what we are going to discuss today, right, is how to achieve statistical edge, okay, via expected move. And you are going to learn a lot right here, right now. So we're going to kind of walk you into some of the logic. I'm going to walk you into some of the logic, okay? And then, okay, I'm going to show you how to trade it. Is that fair with everybody? Okay. And again, I want to be very, very clear with this as I go through. At some point, even the most experienced traders might be like, damn, he's going deep today. I am going to go deep. Okay. I would rather you today be a little overwhelmed than underwhelmed. Okay. This is not like learning a new language. There's a couple of terms and definitions. One of the most important ones today will be the terminology of what we say is expected move. Expected move is something that has been around for decades. Okay. Decades. I knew traders that were trading in the 70s and knew what expected move was. So when we start talking about expected move, let's get into it. What are we really referencing? In this case, let's go to Tesla. Let's go to Tesla. Why? Tesla's a wild child. Okay. What does expected move really mean? So one of the things that you can do, this is Tesla. Okay. And Tesla happens to have an expiration, for example, for tomorrow. This is not today. Okay. Today is Tuesday. There is no today. There's tomorrow. Why? Because right now, equities like Tesla, equities, stocks, right? Stocks like Tesla only have a Monday, a Wednesday, and a Friday expiration. So in this case, what are we looking at? We're looking at tomorrow, okay? But what are we saying about tomorrow? We're saying that there's about a plus or minus $8.50. That was a really bad $8.50. We're saying, okay, that there's about an $8.50 expected move. You guys with me okay? Yeah? All right. So $8.50 expected move. Now immediately people go, excuse me? Where the hell did that number come from? And to the answer to that, okay, it's like an at the money straddle, somewhere around here. It's like an at the money straddle. What's an at the money straddle? It's buying a call and buying a put. So if I bought the call and bought the put, the money is where the stock is trading. The money is, basically Tesla's trading 181, 182. So I'm looking right at about the 182, okay, strike 182 half, and the at the money straddle is trading for $7.75. Did you know that if you add a call to a put, it gives you basically expected move? That's what the market says it's anticipating tomorrow to be. And you go, well, how do you know that that's right? Okay. You don't. You know how you know it's right? I'll actually give you how you know it's right. Okay. You don't know it's right. All hell could break loose tonight. Right? I mean, look, let's not sugarcoat this. All hell could break loose tonight. Okay. There's who knows what could hit the tape in the middle of the night. Yesterday was wild enough. But I will tell you this. Okay. Why do I trust that number? Because this is not just a number. Look how many contracts are trading in this today. 53,000 here, 37,000 here. How about this? I trust the numbers on the screen because there's billions of dollars that are a hell of a lot smarter than me. This is like the line in a game. Okay. In some cases, in some products, it will be trillions with a T. So there is a very high probability. What we're going to trade here is probability. Okay. One thing you're not going to see me do today. You know what you're not going to see me do? You're not going to see me. Let's look at the chart. What does your MACD say? Okay. My MACD says I got your 618 right here, big guy. I'm not going to do that for tomorrow. Look, I have no problem with technical analysis. None. I probably have a little chip on my shoulder about it, but none. My problem is, okay, you're in volatility right now. Okay, put on your big boy pants because you're in volatility. Predictability is out the window. People are freaking out about tweets. Tweets, bring them. Bring the damn tweet. The tweet's going to help, not hurt. Why? Because I'm going to trade for expected move. You go, what does that mean? Yeah, I'm going to trade the expected move. And I'm not going to use just any expected move, right? How about if I use a chart and apply what we term weekly expected moves? Okay, so we're going to come in here and we're going to apply what we term weekly expected moves. You go, what the heck are you looking at? Right? Here we go. Here we go. This is where the week started. This is the upper edge of an expected move. This is the lower edge of an expected move. You go, what does that mean? This is how the option marketplace has been depicting risk that you probably didn't know about. Some people do know about this. If you trade without this, I'm going to tell you right now, and I'm not trying to pick on anybody. Market making firms, proprietary trading firms, okay, risk managers, everybody uses expected move. They've used it, okay, for 40 plus years. They've used it for 40 years. I've been in the business since 98, and it was around well before me. They didn't call it expected move, though, at that point. You're like, what's the at-the-money straddle trading? That's options, okay, are what handicap forward risk. So if you look at expected move went from like, well, this is what the marketplace was anticipating to the market's going to get drawn to the edges. Take a look at Tesla. I'm not just picking Tesla out for the hell of it. I'm not picking Tesla out because, oh, that's a great example. Look, drawn to the expected move, drawn to the expected move, right? Okay, let's not use Tesla. Okay, and by the way, I know people are like, I want that chart. You give me the chart, please. Okay, no soup for you. Not yet. Meta. Okay, what's Meta doing? Ooh, Meta's just basically flat. But Meta was interesting. Meta, look at that. Last week hit the upper edge, hit the lower edge. Earlier this week, almost hit the upper edge, reverted back down. Hold everything. Hold on there, cowboy. Okay, where's Apple right now? Apple? Holy crap, look at that. It's right at the upper edge of the expected move. Where's Google right now? Okay, well, holy crap, it's at the lower edge of its expected move. Where's Microsoft right now? Holy crap, it's right at the lower edge of its expected move. You think I'm new? Okay, not new. We've been watching this stuff week in and week out. You just come to the lower edge of the upper edge. Okay, and all we're going to do, okay, is we're going to take some shots. Let me explain how the strategy works. Okay, all expected move is, you saw this graph and it was like 3 little lines on there, right? So you saw this chart, okay, that had 3 lines, 1, 2, 3. Okay, all this is that was supposed to be a nice distribution curve. Okay, all this is a distribution curve kind of like flipped on its side. What I mean by that is it's this. Okay, let's put in some expected moves. Let's put this in. Let's kind of script this. All right. So this is where the week started. This is the upper EM. That's the upper expected move. And down here is going to be the lower expected move. Now let's just put a fictitious symbol called Apple. No, I'm just kidding. Let's put a fictitious symbol in here. Okay. Let's just call it stock. Okay. Stock. So every fictitious, I hurt my hand the other day, so I can't write. Every fictitious stock to me is stock, which, if you know, stock is actually a form of caffeinated beverage. My refrigerator is stocked with stock. Oh, damn, that's good. By the way, you don't need Thinkorswim for the expected move. You can use interactive brokers. You can use E-Trade. Stop freaking out about your brokerage firm. Man, people, we live in the world right now, okay, of AI. I can get you expected move in a second. Don't worry about that. Okay, don't worry about the expected. Don't worry about the tools. I'll get you the tools. What you need to understand is the concept. So stock is trading right at 100. It has a $10 expected move for the week. Either it's going up $10 or it's going down $10, and it's supposed to stay in that range, okay, about 68% of the time. 68% of the time is just one standard deviation. Don't worry about that. Here's what we're going to do, okay? What happens now with 0 DTE, okay, is a gap-filled wonderland. What's been going on, okay, is overnight we've been jumping, okay, to upper or lower edges of expected move. Well, here, don't take my word for it. Let's go to the markets and let's look at it live, okay? Look what happened to Microsoft. Literally opens almost to the lower edge of the expected move. I mean, yes, okay, it took some time, but it basically gap prints lower, right? What else you got? Let's go look at Apple. Apple, okay, almost like gap prints higher, right into the upper edge of the expected move. I mean, today it hit it. It's pulling back a little bit because the market's pulling back, but it hit it. That's all that matters, okay? You can start looking around even more, like Broadcom. Okay, Broadcom right at the upper edge of the expected move. Broadcom though pulled back a little bit today. This could be advantageous. Broadcom can be advantageous. I may have to price this one a little bit because I'm shopping trades right now in my head. Google, okay, Google's basically on the lower edge of its expected move. So what are we going to do? Okay, we're going to play a little game called pin the tail on the donkey, right? What's pin the tail on the donkey? For those of you that have no recollection of what I am talking about, we're going to take shots, okay? We're going to take a shot for the upper edge of the expected move or the lower edge of the expected move. You will not trade both. I'm going to say that again. You will not trade both. Statistically not relevant to do so. And by take a shot, okay, what if I could go out and risk 50 cents to be able to make $2? Okay, what if I could go out and risk 50 cents to make $2? All right, we'll talk about edge here in a second. Let's talk about risk reward for a second. I'm going out of order. Okay, we're going for it. Risk reward. I love this one. Risk is apparently a shark. You're on fire. Okay, but reward, you're on a rocket. I mean, that just does it for me. There's an aircraft in here. Okay, ChatGPT is awesome because it put a bear under reward. Apparently, it knows me better than I know myself. I want you to think about taking shots. Okay, one of the most effective ways we have found, okay, to trade 0 DTE, we're going to risk, for instance, $50. You might be able to make, okay, 200 from it. I should actually put 200 in here. We're going to go out and we're going to risk, okay, $70. Okay, $70. You might be able to make like 250 from here. Okay, we're going to go out and we're going to take a shot. We're going to go out and we're going to take a shot. Sometimes you're going to miss. But when you hit, you're going to hit big. So what am I actually referencing in here? The strategy right now is actually going to be low probability, but what? High reward. Okay? Reward is huge. Okay? Versus the risk in the trade. We're going to go out and we're going to take as many swings as we can. You're going to swing as hard as you can, as often as you possibly can, okay? And you are going to strike out, and you are going to strike out. And then when you hit, okay, you're going to hit huge. All right, that's what's important in here, okay? And what you're trying to do is you're literally trying to play pin the tail on the donkey. And it's all about edge, okay? It's about an option selection criteria and about statistical expected move setup. That's what this trade really amounts to. And when we start to get into it, I'll show you trades after trade, like here's $63 to make back 151. Here's $28 to make back what, 151. Okay, I'm going to show you all of those, okay, in just a moment. I'm going to show you the exact trades. But before I get there, remember, we got to get an edge. We got to teach you a little bit more about how to get that edge, right? Here's the setup that I like to go after. This, people, is what I term superfly. So some of you may or may not be familiar with a strategy called a butterfly. Why do we call it superfly? Superfly 0 DTE, okay? Here's the setup. I'm going to put a trade on today for tomorrow's expiration. And immediately, as soon as I say that, I'm going to put it on today, but for tomorrow. Somebody goes, excuse me, that's not 0 DTE. I got all day tomorrow, okay? I got all day tomorrow to be profitable or take a loss. But the trades I'm going to put on today, okay, are going to be very, very minute risk, okay? And you go, well, how do you know where to put the trades? This, where I was talking about a moment ago, I was telling you guys a moment ago, you don't need the stupid expected moves. Don't you think I have them all? Don't you think I have all the expected moves written down? This is an expected move matrix. It tells me exactly where to place every single trade. It's my little cheat sheet over there. I share that, okay? I share it all the time. And people go, share it with me right now, man. Okay, no problem. Okay, no problem. But it changes every single week. So this is good for the week. It's static. What's static mean? Static is for the week. Okay, those are your expected moves for the entire week. I just popped them inside of the chat room. Why did I do it? Okay, because I want you to see it. I'm going to manipulate this and change it a little bit. All right, meaning like, look, right now we're in a live market, and these are trades. Okay, these are trades. I've only been trading this strategy since February 2nd. You want to know why I've only been trading the strategy from February 2nd? Okay, because I'm going to tell you something right now. Strategy's only been around since February 2nd. Okay, literally. Okay, how do we know that? Because the strategy's only been around since February 2nd. That's it. Okay, it didn't exist before then because there were no options. Okay, for that there just weren't. This is where zero DTE kind of came in and really changed the way we kind of feel about the markets entirely. They started coming in with these Monday, Wednesday, and Friday expirations. Now let's get into it. Iron Condors and the SPX is a guaranteed losing trade. Done. Just figured I'd give you that one. So not to offend you, but it's a guaranteed losing trade. I can show anybody statistically what trades work and what trades aren't relevant. Okay, the whole idea here, and I'm dead serious, this is about statistical edge. It's about the edge. That's why these trades work. What's the statistical edge? The edge is, okay, we know for a fact that you're drawn to edges of expected move. Okay, this is Google. Okay, I'm not going to trade Google right now. We know for a fact though that we're drawn to edges of expected move. What we need to then do, okay, is we need to figure out where to take the shot. Like I'm looking right now, okay? I'm looking right now and I'm looking at Meta. I was going to do a trade in Meta. I don't know now, okay? Now I'm a little bit more edgy. Meta was a little higher than this, okay? We still have a couple of hours left on the board. By the way, I'm going to trade live here today. And this is actually one of the more challenging environments because normally when I do these trades, I'm within 1 hour of the close. Here we got plenty of time. So with all due respect, you're gonna have to be a little patient with me because I'm gonna have to price these things live. What I'm looking at in Meta, and I'm just going to throw it out to you guys live. What I'm looking at in Meta, because this is where I was planning to trade, might have changed my mind. Do we hit the lower edge or upper edge of an expected move? Not today, tomorrow. Do we hit the upper edge or lower edge of the expected move? We get a tweet overnight, boom, you explode to the upper edge of the expected move. What do you guys want? Okay, upper or lower? Okay. By the way, the static expected moves, these are the Friday to Friday expected moves. I'm not going to necessarily get into that. Okay. And yeah, we're going to trade here in a moment, but I'm actually shopping it. And when I say shopping it, okay, you're going to see me actually kind of calculate these things like in real time. So you're dead even on the week. Earlier in the week, we almost hit the upper. Okay. Maybe we're on the way back down to the lower. Huh? Could Meta actually be headed for the lower expected move? Okay. I don't care whether you're bullish or bearish in here. It's interesting. Okay. One thing you don't want to do is never do both. Never do both. Statistical edge against you. So if I take a look at the lower expected move, somewhere around like 575-ish. Okay. I'm going to round it. 575. Okay. By the way, I was totally, and again, I am not sugarcoating this. Okay. Nothing in me was ready to trade the lower edge of the expected move. Nothing. I was actually pricing this to the upper edge of the expected move. But that was, look at this. This thing must have sold off a lot in just the last few minutes. It did. Okay. So I'm looking right now at my little cheat sheet in here. And my cheat sheet actually shows Meta. Okay. Lower edge of the expected move is way down there. I mean, way down there. I'm going to open up a few more strikes. Let's get crazy. I could actually trade, if you will, okay, right into this lower edge. This is like 575-ish, okay? So I could probably build something. Oh, this could be a big one too. It's a big one. Let's go look at a 3-strike wide butterfly. This one would have a range, okay? Meta would have to be off $10 tomorrow or more. If it's Meta's off $10 tomorrow or more, you're actually profitable, okay? I don't know about you, but I'm cool with that. Okay. Somebody goes, what the hell is he about to do? Okay. Yeah, about to make a trade. He shoots, he scores. Okay. I'm not opposed to that one. That's actually better than I thought it was going to be. Now, before anybody even considers any of these trades, so I am, and yeah, I'm doing it live before anybody even considers one of these trades in here. You better know one thing, okay? When it came back to this risk reward, you have to make, if I just risked $60 in the first trade, okay? I'm going to draw this up here. If I risked 60 bucks in the first trade, every corresponding trade needs to have around $60 of risk. So you need to understand, you don't even know my next trade yet. My next trade may not be 60 bucks. My next trade may cost me 90 bucks. You have to try to make these trades equivalent in terms of risk, because if you have trades that are 28 cents, 60 cents, 90 cents, what's going to happen? The 28-cent trade might make a ton of money. It might make 300%. The 28-cent trade might make $1.50. That's huge at a percentage. Then you strike out on this one, strike out on this one. This huge percentage return is supposed to offset these two, but it didn't because your allocation was poor. Does that make sense to everybody? Here's the one key. You have to make your allocation deadly consistent, okay? Deadly consistent, as consistent as you can. And it's very easy to do. And there's an allocation methodology, okay, that obviously by time constraint, I don't have the time to necessarily get into today. All right, so, well, there's one trade, okay? There's one trade. By the way, if you guys want that one, hey, anybody want that? Hey, come and get it. I'm going to pop them right into the main room. Okay. I mean, look, I don't know if these are going to make money or not. And I'm telling you right now, if they don't make money, okay, let them expire. Let them expire. It's fine. Okay. So it's okay. Now, we could place 3 or 4 today. 3 or 4 could strike out. I want to make that clear. I could place 3 or 4 trades today. 3 or 4 could absolutely strike out. And that's par for the course, man. That's what risk reward is about. This is, okay, low risk, high reward trading. Low risk, high reward trading. Playing pin the tail on the donkey. I don't sit here and go down, go down. And I'll tell you why I don't sit here and say go down, okay? Because I'm going to do another trade and it's probably going to be what? Instead of being bearish, I think I'm actually going to probably be a little bit bullish somewhere, okay? Now, where could I be bullish? I can shop around a little bit, okay? Here's like NVIDIA. NVIDIA, the upper edge of that expected move is somewhere around 180, okay? I don't think this trade's going to work. Okay, 180. Let me actually go look at my little cheat sheet over here. Where is the upper expected move in here? Okay, NVIDIA, 181 and change. 181 and change on my little cheat sheet. Okay, so if I do this trade, this is not worth it. Nope, this is not going to work. Okay, so I can already price in my head. I already saw it. I'm going to show you now. NVIDIA, as much as I want to do this trade, that's too expensive. I'm not going to pay $1. I'm not going to pay $1 for a $5 wide spread. Done. Okay, this is what I reference in terms of criteria. Criteria has to get you, okay, to low risk, high reward. And there's a lot of criteria built in here. So NVIDIA is kind of a no-go. What else you got there? Okay, let's go look over here at Broadcom. Broadcom, what do you got? So Broadcom is interesting because it's very close to the upper edge of the expected move. Now, the finite edge of expected move, when I say finite edge, the upper edge, okay, is somewhere near 328. 328. Okay, my expected moves are very, very accurate. So if I take a quick glance at this trade, this may or may not work. And I'm going to come in here and I'm going to price, okay, a $5 wide butterfly, 66 cents. Okay, that ain't bad. That ain't bad at all, because I'm basically playing pin the tail on the donkey. If Broadcom comes up right to this upper edge of expected move, you realize it was there yesterday and it was there today, okay? If it comes up to this upper edge of the expected move and slightly exceeds it, that's where I'm actually positioned here. I'm at 327, which is basically, my little cheat sheet said 328, okay, was its finite expected move. So this trade, I think that this thing, just looking at the pricing moving in here, this thing should trade somewhere in this neighborhood. I'm going to have to actually execute to price, right? So I can't stress this enough. When I say execute to price, I'm probing market orders right now. Like I'm probing the marketplace, okay, by hitting confirm and send. So this is the kind of crap that, you know, people don't like, oh, I'm just gonna fire it where the mid price is. You crazy? Okay, you don't fire where the mid price is. You fire and try to figure out where that mid price really is. Somewhere in my neighborhood here, okay, somewhere in my neighborhood here is where that mid price is. I'm right on top of it right now, okay? I think I can fill this between 66 and 67 cents. So I'm gonna leave it there. Yeah, there we go. Okay, so I'm going to leave it there now. So I filled that one, okay, at 67 cents. I'm going to create a duplicate order. I'm going to copy it, okay, paste this one out. So this got a little bit better than I thought it was going to be today. And again, both of these trades, I'm just playing pin the tail on the donkey. You realize there's a lot of time left. This marketplace could sell off huge, rally tomorrow, okay? I have no idea, all right? Or that marketplace, for instance, in, that marketplace inside of Meta. Meta, I'm going to be honest with you guys, I'm kind of baffled in Meta. This was a good bullish setup earlier, and now it's a great bearish setup. Okay, let's go look at Tesla. Tesla, okay, there's an upper edge of expected move over there, okay? But Tesla, woo, this is a wild child. It's an absolute wild child. 390 is where the expected move is in here. So in Tesla, I can go deep and wide, 1 month, 2 strike, butterfly, okay? Look at Tesla. Well, Tesla, can it trade up $5 tomorrow? Okay, I might do another one. I might do another bullish trade in here. Okay, I don't really care whether people are bullish or bearish. Tesla's kind of bucking the trend of the marketplace a little bit. If I can fill this thing properly, okay, I'll take it. Hitting a $5 wide butterfly in Tesla is not easy. Okay, it's not easy being green, but I don't mind taking shots here. Okay, and if I strike out on a bunch of them, so be it. But we're in volatility right now, and there's a pretty good chance that at some point during the day, tomorrow, okay, that I can actually achieve success on one of these if the market's whipping around a little bit, right? So I just took another one. Cool. All right. So, oh yeah, we're posting a few of them in here. Okay, I'm giving you guys a little selection. If you're new to this, like I don't think you should necessarily like pop all these trades on. Like you gotta kind of know, what you're doing here. I'm firing off trades because I gotta tell you, before coming on here, but literally before coming on here, I'm like, these trades suck. I get on here and I'm like, no, they're opening up a little bit right now. Okay, I got us some decent trades in here. Now, I think I'm gonna stop there. There was another one I was actually shopping earlier. I was shopping a trade in gold. Okay. I was shopping this trade in gold. I think I was around the 405 strike. Holy crap, did this thing move? Bear with me for a second. Okay, I was wrapping this trade right around here. Wow, it already moved. Never mind, the gold trade is gone. It's gone. I was shopping a gold trade for the lower edge of an expected move, and it hit it. I was literally shopping this right around the 400 strike. And we must have been up here when I was shopping it, and we dropped right into it. So, and it's gone. It's okay. Okay. So what, pray tell, did we just do? So we did a trade in Meta. Okay. We did a trade in Meta. And the trade in Meta, okay, Meta sells off big. Okay. Winner, winner, chicken dinner. That's it. Right. We did a trade in Tesla. Okay. What does Tesla have to do? Tesla just hits this upper edge of expected move, okay, we're home. All right. What else did we do in here? So it was Meta, it was Tesla, and then I actually shopped Broadcom. And I thought to myself, Broadcom, I didn't think that this was a great trade, a few minutes ago. And the marketplace helped us out. It backed off a little bit and it's rallying back up, but that Broadcom trade sits very, very nicely in here. Okay. So we're good to go. We're good to go. We have 3 trades, and what I'm literally trying to do is, I have 2 bullish and 1 bearish. So be it. There's going to be days where I have 2 bearish and 1 bullish. Some days I just do 1 bearish and 1 bullish, but we don't want to trade both bullish and bearish in the same underlying. Okay. Look, there's things I can control in this business, so the things I can't control. But I'm going to tell you what I can control is simply this. I know that if I look at this Broadcom trade, okay, and I know if I look at that trade, and I'm gonna pull it back up, right? So let's come in here and create a duplicate order. I know if I look at this Broadcom trade, I'm not gonna make $5 on it. I'm not gonna make $5 on it. Not holding it to expiration. I can easily make $1.50 or $2 on it. Okay, and if you think about that from a percentage return, okay, if I make 100%. That's not what I'm here for. I'm not trying to make 100% in this trade because I'm going to miss on another trade. I got to make 150. I got to make 200%. People, that is what we're here for. Okay. Superfly is about number of occurrences. Superfly works. Superfly has statistical edge because it's not going to take you more than a few minutes to realize every single week we're hitting upper edges, okay, lower edges, and it's pin the tail on the donkey, and there's multiple shots a week in multiple underlyings every single week. Okay, your risk reward, it's a very minimal risk for this huge reward. And what you just saw, okay, that setup is forming before we've even closed. I don't even know how the market's going to close today, okay, but the markets are going to gravitate towards expected moves. Okay, the right trade, great. I only, out of the 3 trades that I just placed, I only have to hit 1 to pay for the other 2 and then some. Okay, and now Superfly results. Superfly DTE. Look, this is $45 invested in Meta. I got back 115. That's 114% return. First, I'm going to tell you, you don't go out and have to risk 45 bucks. Okay, there's one thing that I can't do for you. I can't tell you how much money to allocate. You got to make the determination. And that's where spend time with me. Spend time with me. I will teach you the right allocation methodology for this because it's so important. You have to go out and form, okay, an allocation. Now, I don't mind saying this, 114%, that doesn't really do it for me. You look at that and you're like, man, that's a pretty good return. That return sucks. That's marginal. This is a marginal trade. Okay, the next one, 140% return. Now we're talking. This is reasonable. 63 cents invested. I got back 151. It's 140% return. Here's another one in Meta. $28 invested. I got back 151. That's a 311% return. Okay, you don't have to have too many of these. You don't have to have too many of those. Okay, you can miss 4 or 5 trades. So I'm going to tell you right now. Look, I have 3 trades on. Don't get pissed at me if we miss 3 in a row. But still my heart. Okay, there's going to be nights where I put 2 trades on, one will make money, one will lose money. There'll be nights where I put 3 trades on, all 3 miss. There'll be nights where I put 3 trades on and all 3 trades hit. It's about what? Number of occurrences. Okay, Superfly. Here we go. Microsoft, $83 invested, 255. It's 207% return. This is ideal. Okay, this Apple, $38 invested, 120 back. And again, this doesn't need to be 38. This could be $380 invested, getting back what? 1,200 bucks, 211% return. I'm playing the lowest common denominator in here. Okay, another Apple one, $48 invested, got back 101, 110% return. That one's marginal. Okay, here's one. Okay, Tesla, $55 invested, got back 210, 281% return. Okay, here's another one, $52 invested, 130. Okay, this is 150% return. It's decent. Okay, now we're talking. $39 invested, got back 110. It's 182% return. Here's another Tesla trade. This is the first one I ever did. This is literally the first trade I ever did because there was no Monday expiration before these. Okay, this is February what? Check this out, and I want to be clear about this. Okay, I've been in since the ground floor. Since the ground floor, I filled, okay, a profitable trade in a 0 DTE butterfly, Superfly, at 7:32 in the morning, okay, of February 2nd. The damn things were only open 2 minutes before we actually hit a 365% return, okay? This is important, okay? By the way, does this look familiar to anybody? Time out! Does that one look familiar to anybody? Okay. Last Thursday, I did a presentation right here, same time, same bat place, right? I did a presentation last Thursday. I hit it. I hit the butterfly last, we did a butterfly while live. We were talking about Superfly last Thursday. I hit it. $40 invested. I got back 150. It's 275% return. Okay, that's the trade that we did live the other day. 40 bucks to make 150. Here's one that I actually just did and closed it on Monday. This one's in Meta. $63 invested. I got back 200. It's 217% return. Okay. These things are huge. And again, you don't have to have 63 bucks. You could have 630. Okay. You know, you can multiply this in 3 contracts, have like, you know, $249 at risk. It's fine. Okay. This is the opportunity. Most traders, they're chasing the move. They're chasing it after it starts. Superfly, okay, is just about positioning before it begins, positioning around an expected move. Okay. Why these moves can be so big. All right. The setup is right. Overnight pressure could pop markets higher or lower. Like right now, I don't think I need to explain that to anybody. I mean, the last couple of nights, we've had what? 100-point plus moves in the S&Ps. That's how triple digit moves become possible. Okay. There's one big problem. Even if you understand the concept, you still have to know, okay, how to put it on. You got to know the allocation. You got to know all the criteria. Anybody ask the question, why did he do a $5 wide spread, a $7.50 wide spread, okay, not a $2.50 wide spread? How did he know to back away from NVIDIA? Because NVIDIA looked too expensive. Because Superfly, okay, Superfly is about conditions. Superfly is about criteria and about locking in the right criteria to achieve that right edge, okay? So traders keep asking me, Don, can you alert us when the setups appear? And that's exactly what we've actually built. For approximately the last 6 weeks, we have been trading Superfly. For 6 weeks, we've been trading Superfly. And for that 6 weeks, okay, we've been in beta. Beta is we've had a subset of clientele coming through and actually trading with us. People, we've actually taken Superfly now out of beta. It is ready for the world, introducing real-time alerts for the overnight zero DTE effect. That's what Superfly is. Okay, what these alerts do helps you identify, okay, the Superfly setups, helps you identify, okay, the right positioning, helps you identify the right strikes, the right expiration, the right price. Here's everything, okay, included with it. There are up to 6 Superfly trade alerts per week. Okay, and this is everything that's actually included with the Superfly alerts. Up to 6 Superfly trade alerts per week. It's $2,000. By the way, there is no other alert service here at TheoTrade, okay, period, that's that active. I mean, we're firing, all right? So it's up to 6 alerts. I would say at the absolute bare minimum, if there's a week where all hell is breaking loose, maybe I'll only do 3 alerts, but I'll do up to 6. This week, okay, I'm gonna tell you right now, from Monday to today, we're already at 5 alerts. Okay, I'm already at 5 alerts this week, and oh, I apologize. Today's well, I guess I'm counting last Friday. I did 2 on Friday, which closed on Monday, kind of like for this week already. So we're basically at 5 alerts already this week. In addition, okay, to just Superfly alerts, I am a huge believer. Okay, we're gonna teach you guys to fish. I will teach you every nuance of how to be able to effectively execute these trades. And when I say every nuance, I'm going to do a 5-week live Superfly mastermind. Now, I held a mastermind a couple of weeks ago, okay? But the mastermind we were kind of like they just announced all of these new expirations. So I had to kind of get my footing. So I decided to do another 5-week live mastermind. It starts April 2nd. April 2nd, okay? It is going to be at 8 a.m. Pacific, 11 a.m. Eastern time. I'm going to tell you right now, that right there is worth the cost of admission, period. Okay? That's worth the cost of admission. And again, I know people want the alerts. I know people want to trade with me. Okay? I'm a huge advocate though. Learn it. Because every person in here, you don't have to be hooked on an alerts. You don't have to be sitting there all day. He's going to alert me. The alerts are easy too. The alerts come out, okay? The alerts come out on a Tuesday, okay? The alerts come out, and when I say they come out on a Tuesday, for Tuesday, which is today, releasing them for what? For Wednesday. Then the alerts come out on a Thursday, late afternoon, and then on a Friday, late afternoon, in the last hour of the day. There's only 3 days that we're even trading this crap, okay? And you don't have to sit in front of the computer all day. But I'm a huge advocate. I think you guys can actually do just as well. Like, take your own shots, build some of your own trades, learn it. Because even if you're following what I'm doing, you're going to be better learning it, okay? So listen, I know that people just want to be spoon-fed trades and so forth. People, if you got skin in the game, learn the crap. Is that okay to say? Because when I say you got skin in the game, if you're going to put capital at risk, please learn it. Learn how to do the allocation properly. Because I get people all the time, they're like, I risked 28 cents and I made 300%. But then I risked 80 cents and I lost. And that's not making me any money, okay? Got to make the allocations even. Even out your allocations, okay? And you're going to hit this out of the freaking park. Our track record right now is great, but our track record needs proper allocation. So the 5-week Superfly Mastermind, you can guess that one of the weeks is going to be allocation. Okay, there's a week on expected move, a week on allocation, a week on just basically building your fly, a week on exiting the fly, and then of course you're just going to have a week of trading with me. Let's trade. Okay. In addition to this mastermind, I just completed a 5-week full blown. It's called the Don DTE Mastermind. It's recorded. Okay. That is also, it's worth its weight in gold. All right. This is like everything you're going to need to know just about inception of zero DTE. The mastermind that I'm about to do is exclusively about Superfly. The mastermind that I just did, we're giving you the recording of it. The mastermind I just did, we're giving you the recording of it. That covers everything zero DTE. There's other strategies taught in there. There's reversal strategies and so forth. You guys are going to freaking love it. Okay. So you're getting 5 weeks of a Don DTE that you can listen to now. Okay. Then you're going to come in to a 5-week pure Superfly zero DTE. In addition to it, we've also got a live trading room. There's a live trading room for just Superfly, okay? And there's weekly strategy sessions. I'm going to go live, okay? Okay, he's doing it live, 15, 20 minutes. And we're just going to talk about some of the flies we did that week. We're going to talk about what criteria is working, what criteria is, needs a little bit of adjusting. You have to understand, we are in the infancy, okay? We're on the bleeding edge of what's even possible in this marketplace right now because these products just got added in February 2nd. The retail value here, it's almost $12,000. Go to Superfly, okay, or theotrade.com/Superfly in here. And I'll bring up the page really quick because I want to make sure that everybody sees, okay? At any point, if you need us, please call us. No hesitation. There are some people like are not comfortable putting credit cards in and so forth online. It's fine. 623-244-5657. Okay. We'll pop the number inside of the chat room. Take you down, okay, to the bottom of the page. I'm going to talk about a 30-day money back guarantee. The only selection in here to make, you can do 3 years of Superfly or you can do 1 year of Superfly. Okay. 3 years obviously is okay, a substantial savings over the 1 year in here. Credit card number, okay, everything. Again, if you're not comfortable, call us. Call us. Happy to actually walk you through it. Now, onward. With this, it's 30-day money back guarantee. We always do this, okay? And I'll reiterate. We want people here at TheoTrade that want to learn this stuff, okay? And that's not meant to challenge you. That's meant to tell you, okay? Like, I get it. Sometimes life gets in the way. You get busy, something happened, you need money back. It's fine. Okay. It's 2 or 3 grand. It's fine. It's okay. Some people are like, well, I thought I could trade this, but I'm not really comfortable. Look, if you're not comfortable, okay, we'll get you comfortable. We'll spend all the time we have to get you ramped up for this. Some people are like brand new to options. They don't even know what a butterfly happens to be or an expected move. We will get you, okay, from point A to B to C to get you to be able to trade Superflies. That's our job, okay? Your job, spend the time and learn it, okay? I want people to learn this stuff before they just blindly execute. You don't want to follow somebody into trades without understanding it. You don't want, okay, a quote unquote black box system. Do you really want to trade on something that you don't understand? And I'm not trying to be facetious with that one, okay? By the way, somebody was asking if the success rate. Okay, if I told you this, how about the success rate is close to about 30%? About 30% of the trades win. Does that work for you? People go, oh, that success rate sucks. Are you kidding? That's absolutely stellar. 1 in 3 trades, okay, wins, okay? You're huge, okay? Huge. And don't forget it. This is not like a high probability strategy. It's the opposing side of it. 30% of the time being right, okay, is stellar returns in here. And that's what it's about. To have 2 trades lose, 1 win, golden pony boy. Okay. It's absolutely huge. And you know what? I love when people use like the baseball analogy. If you're batting 300, okay, that's incredible. And that's exactly the way to think about this. When you say, you're batting 300 or whatever, okay, that basically means you step to the plate, you got a 30% chance of actually hitting the ball. It's good. There's a 30-day money back guarantee. With this, okay, and I'll just clarify, there's no stipulations. You don't have to call us. You don't have to do a little dance, make a little love, get down tonight. This is not like a gym membership where you have to like give blood to get out of it, okay? If you're not comfortable at any time in the next 30 days, just let us know. It's okay. We will still love you, all right? This is a strategy, okay? It's about winning over time, okay? It's not about winning tomorrow. And that's another aspect of it. Like Superfly, it's number of occurrences. So if you did, let's say, over the course of the year, if you think about, I'm going to trade up to 6 trades, okay, in a given week. But let's say I average 5 trades a week. Let's say I trade 50 weeks out of the year. Like what happened to me the other 2 weeks? I don't know. There's Christmas. There's New Year's. Sometimes there's Thanksgiving might get in the way. Okay, so let's say we trade 50 weeks out of the year, pretty average year in there. Um, you're looking at you could see as many as 250 alerts out of here. Okay, I'll aim maybe for 230 to 250 alerts out of the year. Okay, there's nothing else, okay, at TheoTrade that's going to have that number of alerts. You get a lot of opportunities in here. The goal is this, okay? You don't have to trade every single alert. Even if you did 100 trades throughout the course of the year, which sounds like a lot, like I don't want to intimidate anybody, it sounds like a lot, but it's really not. Okay. I mean, I'm sitting there for 20 minutes. You take 2 trades. We just did 3 trades in like 15 minutes, knocked it out, no problem. Okay. On to the next. But check it out. We still give you trade with me. Okay. Trade it with me guarantee. It's a 30-day money back guarantee. If you're not comfortable, let us know. Okay. Everything you're getting over here, okay, this is, it's up to six. So it's a minimum really of 3 trades a week, but it's going to be up to 6. So I'm really trading on Friday, Tuesday, Thursday, like clockwork, okay? And Friday, Tuesday, Thursday. You're like, why Friday? I'm trading Friday for the Monday options expiration. I'm trading Tuesday for a Wednesday expiration. And I'm trading Thursday for a Friday expiration. Okay, you're going to know exactly. Okay, you're going to get it down within like twice. Like you're going to pass through, a Tuesday afternoon, you get the alerts. Friday afternoon, you get the alerts. And you're going to know that the alerts come within about 70 to 80 minutes of the close is when I send the trades. Okay, there's no randomness in here. Okay, there's not constant, noise in here. It's just the alerts, okay, that are going to keep you going. Now, the 5-week Superfly Mastermind. I'm excited about this one. That is going live Thursday, April 2nd. It's right around the corner. Okay, Thursday, April 2nd. When is it? Okay, well, today we're on a Tuesday. That's next Thursday. Each session is 90 minutes. Okay, you're going to learn to fish for your own Superfly. Okay, we're going to go beyond an alert. We're going to teach you every little nuance behind the Superfly, how I'm finding them. Okay, why the mastermind matters. To me, it's about allocation. It's about understanding. It's about criteria. Okay, and there's actual criteria, entry criteria and exit criteria. And we're going to move beyond just, sending out the trade. You're going to get into the inside of how to even get filled better. So if you think about it, like, if somebody goes to the mastermind and spends a little time at the mastermind, every trade, you might be able to save a penny here, a penny there. A penny is $1 here, $2 there. Okay, that alone in trading, okay, again, it could save you thousands over the years. All right, onward. This is the Don DTE Masterclass. This is a previous masterclass that I did. It just ended though, okay, like a few weeks ago. So the masterclass, okay, just ended, and now you're already getting the recording to it. It's a $3,000 value, okay? And again, this is everything you need to know about zero DTE. We call it Don DTE. And there are multiple setups in here. So all of that, okay, the masterclass, you're gonna see, and this is the previous masterclass, how to structure all of these zero DTE trades, okay, to give you the most effective stance, okay, how to think about allocation, managing exits, okay, all of it. Access to the private Superfly trading room, okay. This is also a big deal, because when I say there's a Superfly trading room, okay, literally there's a Superfly room, okay, that's a Superfly room. And with the Superfly room, okay, that's exactly where we're going to do our mastermind. Okay, you can even find here. I'll actually take you guys through it after enrolling today. Okay, after enrolling today, let me actually show you guys something important. After enrolling today, you're going to come in here. You're into Superfly. There's a Superfly portfolio. Okay, welcome to Superfly. So there's a brief video that I actually filmed. Okay, hey, Superfly trader Don. So a Superfly video, but there's also, here's the link right here, okay? I'm actually gonna put this in a separate tab. Here's a link right here to watch the previous mastermind, all right? All of the previous mastermind, all of the different lessons kind of broken down. People, this is hardcore. And there's actually, it's broken into 7 different lessons. And when you click on one of these, okay, literally it's going. Okay. So you can trap different ports. So if you ask me about, I wanted, you can come in here. Okay. You can even come in here, set the speed. Okay. If you want to listen to me at like 1.5 times or even 2 times, check this out. Like I sound like a chipmunk, but this is good stuff. Trade NQ. No, you don't. I want to trade Russell. Then you're an IWM kind of person. You know? Awesome. Okay. I wanted to take you guys through that a little bit because it's all there for you. Like it's ready to go. And I wanted to give you insight to the room is not just some random room. All the resources that you're going to need to support you in Superfly are available right there. So the room is going to give you access to it, but it's about cutting down distraction, keeping you focused on the one strategy, okay, and getting you prepared for the alerts as they're actually coming out. Now, okay, there are weekly live Superfly strategy sessions each week, okay, after the initial mastermind. Each week we're going to start to come in live, okay, and we're actually going to talk through some of the trades. So we're going to do the entire mastermind of 5 weeks, and then we're going to start to do weekly updates. So that will actually kick off for the most part in early May. In early May, we're going to start to kick off. And again, you've got an entire year of this. You will learn, okay? Oh, you will learn. And I'm going to tell you right now, I think you guys are going to love some of this, some of the trades we're going to do. What we do in the sessions, we're going to review what happened, break down the setup, okay? How the overnight moves kind of develop in here. I mean, that's important. When I say overnight moves and development, like literally how these things are developing. See if we good to go here. Okay, and the right execution technique. Right execution, okay, means a lot, means a huge amount. Now, onward and upward over here, okay. As you guys, again, scroll down, if anybody needs anything, I can see Matt is in the chat room right now. Matt's in the chat room. You can always give him a call. A few people were asking about that number again. It's 623, okay, 623-244-5657. And again, you do have to scroll all the way down to the bottom of the page over here, okay, to make the selection of 3 years or 1 year, okay. Onward from here. Again, everything that you've actually got in here today, okay, up to 6 Superfly trades a week, okay. You've got the 5-week live Superfly Mastermind, starts April 2nd, okay, complete 5-week Don DTE Mastermind, which is recorded, the private room, okay, the weekly Superfly, and again, the entire thing, it's almost a $12,000 value, and it's if you guys want, 1 year is $2,000. For 3 years, it's $3,000 for this. Those of you here at TheoTrade, if you have credits on file with us here at TheoTrade, you can absolutely apply those credits, okay, directly to Superfly. So if you have credits, that is one where both Jeff and Matt can actually help you get you situated with your credits in here. Again, it's not just another alert service, okay? This is help you to build, okay? We built it to help you kind of recognize, understand, and act on overnight 0 DTE opportunities, okay? But most traders are going to miss this. Most traders are going to get knocked around in volatility. Most traders, they just have no idea, okay? You look at this marketplace right now, and it looked like, half an hour ago, we're selling off into the oblivion. Now we're like, wow, this thing's going to rally absolutely huge, okay? Don't get knocked around in volatility. Just come in here and harness it. Volatility is what's going to help you. We gap up tomorrow, beautiful. Apple can make some money. We gap down tomorrow, okay, excellent. You got, Broadcom, okay, could look pretty good. It just goes on and on. These strategies, okay, are not few and far between. In terms of like Superfly, you're going to get ample opportunities. And that's what we're here to do, is to find exactly the best opportunity in the Superfly to get you that alert every single day. So look, go through the live training, give a 30-day money back guarantee, receive the alerts, participate in the room, attend the live sessions, okay? And for any reason, in the next 30 days, if it's not right for you, we're going to refund your, the membership. No hassle, no nonsense, no hard feelings. Okay, we get it. Sometimes life gets in the way. Again, the reality is simple. The overnight moves are happening, okay? Once people see this opportunity, I think some people, man, maybe I'll try to trade it by myself, okay? There's a lot of criteria behind Superfly, and that's exactly why I'm doing the 5-week mastermind, to get you prepared for this. So you're standing at that crossroads, and you can keep doing what most traders do. They watch charts all day, okay? They chase chaos. They react late. They keep missing overnight setups, okay, that formed the night before, or you can learn how to recognize a setup, okay, before the close and position, okay, for the overnight move. All right. Question is, you're going to keep admiring the concept from the outside, or you're ready to actually learn how to trade it. Okay. And that's when I show people things like expected moves, they're like, oh, that's pretty cool. That's admiring the concept. Okay. Put it to action, execute upon it. Understand the concept, be ready for tomorrow's trade, okay, is another. One more thing, okay. I showed you the strategy, okay. Again, I'm sending out a new Superfly trade, okay, every other day. So I just sent some out today. The next one actually that'll come out won't be tomorrow. Take that back. That's actually going to be Thursday. On Thursday, the next Superfly trades will come out. So if you want to be ready for that opportunity, get inside now. Check out the chat room. Start watching some of the classes over here. Get ready for April 2nd. Get access to the training room, the live sessions, the mastermind, the alerts. Okay. Be ready when the trade does actually hit the tape on Thursday. If you didn't do the trades today. By the way, we're here to help. Don't hesitate to email us, support@theotrade.com. If you need us, call us 623-244-5657. Okay. Live mastermind, get in under the wire. Okay. The mastermind is April 2nd. And I suggest to everybody, okay, with that mastermind coming up April 2nd, get your feet wet. Start watching the Don DTE, okay? You're going to be better off for it. By the way, low volatility, yes, it will still work in low volatility. It's actually a great question. So again, it's Superfly, okay? It's theotrade.com/Superfly. Now, when the volatility contracts, the expected moves are also going to contract. As the expected moves contract, the moves that you need to make money are even going to be smaller. Okay, the volatility wasn't crazy when we first started trading the strategy. Like, when I first started trading, okay, in the strategy, the overall market volatility, again, it wasn't crazy. I mean, we were trading right back here when we first started trading it. Okay, you were in like an 18 vol, which is fine. The first couple of weeks were in that lower volatility climb, and it was climbing maybe a little bit, but the first entire month we were under a 20 vol in there. Like literally, we were under a 20 vol for the first month. Now things are rocking a little bit more. It's advantageous, but I think for just some people it's a little bit more intimidating. Don't be intimidated by this. Okay. I mean, this is, again, this is where you want to be. You don't want to be sitting here trying to predict anything, okay? I'm not trying to predict anything. I'm trying to tell you, we're going to gravitate towards an expected move. And in doing so, we're just going to capture those moves. So what do you need to get started? A laptop, an internet connection. You don't even need a laptop for these, okay? You can trade this directly off of your phone. Anything can be traded off your phone. You're going to receive the alert. You just basically put the alert in right over the phone. You're good to go. I think any reasonable brokerage firm at this point would have the ability to trade the Superfly from this. So the mastermind kicks off. By the way, so somebody always asks me about technology. Okay. Probably my favorite device to trade off of is not even a laptop, or I'm not on a laptop now. I'm on a big boy computer, but doesn't make a difference. Okay. The laptop is not a necessity. You can trade off your phone, but I would have to say that my favorite device to trade off of is probably an iPad. Okay. I can trade faster on an iPad than I can off of a desktop or a laptop. It's great. Just touching, what you actually want, what the strategy is awesome. And I will use, and people are always asking me about the different brokerage firms. Okay. Look, I'll even highlight this right now. You can use any broker to trade Superfly. You can use any broker. I use Tasty, and I use Thinkorswim, obviously. Okay, so I'm back and forth between the two of them. Is there a preferred one? Not really. Like, people always ask, what's the preferred broker? I don't really care. I mean, I was in the industry for 15 years, and yes, we helped build part of Thinkorswim. I say we. At TheoTrade is not just Don Kaufman. Okay, Theo Trade is, we have Jeff Bierman, we have Corey Rosenblum, we have Brandon Chapman, we have Blake Young, we have Tony Rago. Okay, many of us actually came from that Thinkorswim TD Ameritrade kind of background. So we have Todd Sweet, and Todd was a market maker that eventually ended up at TD Ameritrade. So onward, a minimum of 3 Superfly alerts a week, probably a max of about 6. Okay, you'll be able to track everything I'm doing, like literally. Okay, throughout the entire thing, you'll be able to track every single trade that I do. There's an entire portfolio. Um, you're going to get access, okay, to Superfly chat, which means you're going to get to not only talk to myself and Todd Sweet and a few other people here at TheoTrade, but you're also going to get to talk to other clientele, because some of our clients, some of the best advice you're going to get is probably from clients that have actually traded this that might give you an insight that's even a little bit different than mine. I like that client community. I think it's great. Okay. By the way, people always ask, not just brokers, but you also ask about like retirement accounts. Okay. You can do that in a retirement account, no problem. You can do it in an IRA. I actually trade extensively inside of a SEP IRA. Okay. It's fine. Yeah. There's no way to do this. There's no way to do it with Block Hunter because Block Hunter is actually going to trade some less liquid products. The only thing that you're trading in here is stuff with 0 DTE, Monday, Wednesday, Friday, 0 DTE. So that's a great question though. Okay. The masterminds on Steve the Mastermind, okay, it is 8 a.m. Pacific, 11 a.m. Eastern time, and it's recorded. I always do the masterminds. I like to do those masterminds early in the morning. It's when I'm well caffeinated, and I think it'll help you extensively in there, to go through it. I'm usually 80 to 90 minutes in every mastermind. You can email us anytime, receive a response within 24 hours. That's support@theotrade.com. Okay, and again, join me inside Superfly now. Okay, there's absolutely no risk to anybody in there. Just to show you, I like to take these trades as well. Okay, so I'll take the trades. I'll go over here to my portfolio. Okay, I like to take the trades and isolate them. When I mean isolate them, okay, here's Tesla. I'm going to move it to its own group, Superfly. Okay, we're going to come over here to Broadcom. Okay, there's the Broadcom trade. I'm going to take this one. I'm going to move this one over to Superfly. Okay, and then of course, last but not least, Meta. All right, and here's Meta. Whoops, apologize. Okay, here's the Meta trade. I'm going to take this one and move it over to Superfly. So I'm actually isolating, okay, and moving it so you can even track these trades kind of individually. It's kind of ironic too, like Tesla apparently is already up 45%. I mean, look, and then this is not a joke, okay? You could close this right now for 40% gain. Did anybody ever think of possibly even trading butterflies on an intraday basis? You have such nominal risk. You can put these things on earlier in the day, you can close it for like a 50% gain. Okay, you could probably make a living just off of learning how to scalp butterflies and 0 DTE. There's so many freaking ways to do this, but this is all about gravitating towards expected moves. Okay, and I'm telling you right now, this is not what you think. Okay, it's not what you think. This strategy is very easy. It's very straightforward. Okay, but you do have to learn something, and if that challenges you, it ain't for you. And I really mean that. Like, if that challenges you, I'm not telling you what you have to do. I'm telling you, okay, that you're gonna have to spend a little bit of time with me, okay, in the saddle. By the way, look what we paid for this thing. This thing's up huge. Tesla is literally, okay, right now, we put this trade on early today. It's gravitating towards the expected move. The strike that we have for tomorrow, okay, is right here at 390. Where are we trading right now? 383, okay? I mean, there's this thing from a probability perspective, pretty good chance we're going to trade into 390 tomorrow. So, but I can't control what this, maybe the whole marketplace gaps down, Look, we're on a war footing right now. It's geopolitical risk. Don't be afraid. This is the crap that you got to learn. You look at the meta trade, you're like, oh, the meta's losing though. Okay, good. Who cares? You have 2 other trades that are up. I have 3 trades in here. 3 trades right now. 2 of them are already up 50%. Get in the game, people. How many of these trades is it even going to take? Okay, to pay the whole damn thing is only $2,000. Okay, it's $2,000. Some of you guys actually have credits. Get in the ring and learn how to do it. Again, you are not going to be disappointed. With that, I want to thank everybody for actually tuning in over here. By the way, everything that we do here at TheoTrade is recorded, everything, including the masterminds. There was a question about masterminds being recorded. Absolutely, those are recorded. So they're recorded. Check them out. If you can't make it to the 8 a.m. Pacific time, no problem. It's recorded. We got you. Thanks everybody for tuning in today. Have a wonderful afternoon. Those of you in TheoTrade, stay tuned. Okay, we've got plenty more coming. I think Tony Rago is waiting in the wings. Thanks everybody. Have a good afternoon. Bye bye.